Dylan, you there?
There we go.
All right, let's start off with why the hell is the Bitcoin price going down? Before we get into any of the charts, Bitcoin was at 66, then 69,000. Now it's dropped. Last night, everyone thought the world was ending. Literally, Armageddon is coming. We're dropped below 60,000. What the hell is going on? Why is that happening?
Yeah, a lot of this stuff, when you're thinking about Bitcoin, the Bitcoin market, a lot of this stuff on the shorter time frame is just driven by the leverage dynamics, a lot of the derivative stuff. So even, the most bullish kind of macro environment, we all kind of, know what's happening with inflation right now. The thesis of digital gold, of something that's absolutely scarce has never been stronger. But in the shorter time frames, you kind of get dislocations where people get a little too greedy, and Bitcoin takes the way of mass pain. So you're gonna see those over leveraged traders. You're gonna see them all get wiped out, and you're kind of seeing that. You saw that a little bit last night, this morning, and it's completely natural, right? It's the volatility is the price you pay for returns, and anybody that's over levered is going to get wiped out along the way.
And when you see this happening, do you get excited, or is this something that worries you? Do you think it'll continue to happen? Like, walk me through just what's going through your head as you're watching this all occur in the short term.
I mean, I'm excited as a Bitcoin holder, as a stacker. I set some limit orders at 60K that I was happy to get filled. So. That's just, looking at the market every day when kind of the traders are levering up and price continues to sink down a little bit. I get excited because I know that, the strongest monetary asset in the world, in the history of the world, is going to be at a discount or most likely. So, I think in terms of years and decades, less so in terms of hours or days. And so, this sort of stuff, blood in the streets is something that excites me as a Bitcoin accumulator.
I love it. I love that you have just as much conviction as I do. All right, let's get to these charts. We got the aggregate futures open interest, and you've got a piece that is circled here in pink that says $26.4 billion. What are you looking at in this chart?
Yeah, so this is basically what we're talking about when we talk about derivatives. This is the open interest. So this is on both sides of the trade, long and short, how much money is directionally betting on the price of Bitcoin in the derivatives market. And so this is recently over the last couple of days when we were at 67, 68, we hit an all-time high there. And some people are saying, that's pretty bearish. We're looking kind of at this double top in the market. And I disagree for a couple of reasons. In dollar terms, we were at an all-time high. But if you go to the next slide there, the makeup of the derivatives market is actually a lot different than it was in April. We've been talking about this, brought it up, I think, on the last couple of times, but what you're looking at is the collateral that's being used to enter these contracts is a lot different. So there's a lot less Bitcoin margin. There's a lot less Bitcoin collateral that's in this futures open interest, which means that essentially, there's less likely to be these huge, massive drawdowns as traders get over leveraged. And 68 to 60K is not a massive drawdown. We're talking about the type of stuff we saw on in May or maybe March of 2020. Just the makeup of the derivatives market's a lot different. For instance, you saw BitMEX, I think last week, they said, hey, we have a Tether contract, Tether open interest. And so that has about $2 billion. And BitMEX is, kind of notoriously known as this Bitcoin only derivatives bucket shop. So just kind of the makeup of the market is a lot different. And under the surface, when you're just looking at the price, you may not see that.
So when you look at this specific chart, this percent open interest Bitcoin margin, we see from, let's call it March, April, all the way through, now, we continue to see that trending down. Now we're at about 45% or so. But you can see that the price is overlaid, and the price was tracking pretty much until August. And then that's when we saw the price shoot up. What do you think actually creates that divergence? Like, why was it tracking so well up until August? And then we get a divergence between the price in gray and the kind of yellow or gold there in that percent open interest of Bitcoin margin?
Yeah, so I think during bull markets, you see just, because of more of the accumulation, less of the derivatives, you see price really go parabolic, like we saw from, say, November of last year through April. And during that time, you see a lot of momentum traders, just a lot of natural greed and speculation in the market. You see traders looking to long their longs, looking to margin long Bitcoin to get more Bitcoin because, the thing's going up 500%. And so we kind of all saw that get washed out. And so over the course of, say, April, May, into the summer, you saw all of that Bitcoin margin, all of that Bitcoin collateral as the price drew down 50, 55%. You saw all that get wiped out. And in the meantime, kind of, behind the scenes, you see this continued maturation and I would say maybe stable coin dollarization of crypto markets, which, some people think is bad. You see a lot of Tether FUD, but this isn't just Tether, it's Tether, USDC, a lot of other stablecoin competitors. And in terms of, the maturation, the financialization of Bitcoin, this is really good. This is bullish. The more kind of stable coins, the more kind of integration with the legacy system, and rather just, instead of crypto collateral, where you kind of see this huge convexity and all these downside moves, that's a good thing. So you're just, you're continuing to see the aggregate amount of stable coins in this market continue to go up. And I think that's a trend that, won't end anytime soon. So I kind of expect this chart to continue to go lower.
When you look at the perpetual futures funding rate, you've got here kind of earlier a week ago or so in November, and then you've got similar activity now. What are you looking at in this chart?
Yeah, so I didn't label it at the top, but this is Binance, right? So Binance has is tied for the CME, but the Binance perpetual swap contract is basically the biggest, most liquid Bitcoin derivatives market in the world. It has about 3 billion, I think, across the Bitcoin and stablecoin, the tether margin contract. You have like $4 to $5 billion of open interest here, and this funding rate is basically showing what longs are paying shorts on an annualized basis. So when this is at 0.69%, that's equivalent to basically longs paying shorts 75% APR on their notional position size. So what that means is the books are really not too balanced here, and longs were getting ahead of themselves. The bulls were levering up at the same time where the spot market wasn't really trending in that direction. And so, these kind of pullbacks, they're quite natural because there's such a strong incentive for the bears to come in and kind of capture this large premium. And so you can see kind of the market diverge sometimes, and sometimes the longs don't get punished. But if there isn't this huge inflow of spot demand coming in the Bitcoin market, then a lot of times, if you see this perp funding really creep up there, it may be a localized top, just on a short time frame. We're not talking about weeks or months or even years.
All right, now you've got this thing titled "Driving Catalyst for Bitcoin Bull Run," and when I was looking at it, you've got the real 10-year Treasury bond yield versus the 10-year TIPS yield, and this is not on-chain metrics like we would think about it. This is more kind of macro analysis. So, what are you looking at here?
Yeah, so I'm really just looking at basically the 10-year yield, the real yield, and this is even if you're thinking about CPI being true, which I think we both could kind of agree that it's not the most accurate metric in terms of stating that the actual inflation rate. I think it's personally a lot higher, but essentially the reason I'm so confident in the kind of the Bitcoin thesis, long term, even medium term, really bullish on Bitcoin, regardless of the leverage dynamics over the next day or week or even month, is because essentially you have the entire world, the entire global, all global assets are based off basically the U.S. Treasury market, and the Treasury market's $30 trillion alone. But when you have real yields, basically the cost of capital is negative. Every single asset on the planet is distorted, and a lot of really smart macro guys that I trust and respect and I agree with them, are basically saying that real yields can't even go positive, or else the entire financial system collapses. The Fed has to continue to print money, and inflation has to continue to run higher than interest rates. And so, in that environment, you have just the bond market alone is, on the low side, 100 or maybe a couple $100 trillion of capital that is guaranteed to lose money. And so, basically with Bitcoin at $1 trillion, 1.2 trillion or whatever it is, that's still super small, and just a tiny amount of outflow from these bond markets where all of these contract holders are guaranteed to lose money into this global monetary asset that nobody can create more of, is supply inelastic. We've the whole 9 yards. The price of Bitcoin will have to really go a lot higher for it just to absorb even 5% of this market.
Got it. And so you've got two charts here next that are the Bitcoin realized price. Talk about this in terms of, it just looks like we just keep hitting all-time high after all-time high, which is what we would expect in a bull market, right?
Yeah. And so I showed like the kind of the 4-year chart, and I show it in linear terms. And then I zoom out and I show the decade long chart in logarithmic terms. And essentially this is just kind of displaying what's going on a long-term time frame. You have the monetization of a new asset class, this from scratch, this global money that was, airdropped on the world a decade ago. It continues to accrue value exponentially throughout boom and bust cycles. And the realized price is basically the average price of every coin on the network when it was last moved. And so this continues to just tick higher. And that's what we see during bull markets. Price bids up at the margin and kind of pulls this realized price up. And I kind of think of this as like almost the true value of the network and the most transparent sense, because you can see the price at which all of these UTXOs or which all of these Bitcoin have moved. And so right now the realized price is about 24,000. And if you can kind of look at this long-term chart, you see that really price only ever briefly dips below this. And so you can kind of think of realized price as like the all-time floor. And this, all-time floor continues to creep up and up and up as the weeks and months go on.
If we go back to the first Bitcoin realized price chart, when we look at this here, I'm not a genius, but it appears every time that the spot price goes below the realized price, that tends to have appeared so far to be a really good time to buy Bitcoin. Is that just like a starting point, super easy historical analysis in terms of the relationship between the spot price and the realized price?
Yeah, it's basically saying that the market price for Bitcoin is less than the price that everybody else paid for the network. So if the realized price is 10K and the spot price goes to 8,000, it's essentially saying it's a fire sale. everybody's paid more for this asset, verifiably so, because you can see the ownership on chain. Every block, every 10 minutes. The property rights, essentially, you can see when these coins were last moved, and if price is below that, then it's basically a fire sale. So I don't know if we get that again. I imagine so, but definitely not any time in the coming weeks or months, in my opinion.
All right, hit us with MVRVZ score. You're gonna have to remind everyone what this is, but what is it showing?
Yeah, so essentially, if you just disregard Z-score for a second, but market value to realized value ratio, it's just those charts that we were showing you before, that realized price and the market price, and just a ratio of the two. And so you can kind of see this dynamic during the bull markets, where price gets really, really bid against the realized price. And essentially that's because there's so much money coming into the market, and none of these holders are really selling. So anybody that wants to secure an allocation has to really bid up the market price to do so. And so the Z-score is just a statistical term for standard deviation, and it basically just it makes a data set fit better. We don't have to go into that, but you can kind of see what a bull market looks like. And so this threshold of like 3 standard deviations, a Z-score of 3, that kind of dotted line I drew right in the middle there. Basically, when you get over that, historically that's been a bull market, and we see price go parabolic over the coming months. And so I'm kind of in that camp where I think we're in the beginning innings of a reflexive bull market, and the realized the MVRV and the Z-score kind of shows that dynamic really well.
All right, 90-day rolling coin days destroyed. This was dropping very, very quickly all throughout 2021, but it seems to have kind of turned around over the last few weeks. What is this telling you?
Yeah, so coin days destroyed basically because you can examine the UTXO set, you can examine all of the Bitcoin when it was last moved, when they were spent. One coin day is essentially, or maybe like 365 coin days, is if one Bitcoin is held for a year. And so if that Bitcoin is spent, if that Bitcoin is moved on chain, 365 coin days are destroyed. And so essentially, if you apply some moving averages, or here we have a rolling sum of coin days destroyed, 90 days, you can kind of see during market peaks, you see lots of coins basically get spent. You see lots of old coins cash out, move on chain, most likely being an economic sell. And so right now we can see, even though we started to creep up in this metric, is really one of the strongest accumulation periods we've seen over the last decade. And even despite the brief uptrend, what we're seeing is we're nowhere near a market top in terms of on-chain holders spending their coins, cashing out.
When you look at this for supply adjusted, this last chart that you have here, what's the difference between the two in terms of what you take away from it?
Yeah, so this is coin years destroyed. It's the same kind of thing, just over 365 days. And essentially, it adjusts for a growing supply over time. But, really what we see is actually this metric starting to bend down. So that's kind of more of an accumulation over the last year. And so, if price goes 4 or 5x, we can really expect this metric, the coin days destroyed metric, to really pick up. And so, over a longer term, not 90 days, but over 365 days, over a year, coin years destroyed, we see really, we're still in the midst of an accumulation phase. We're nowhere near kind of what maybe a bull market top would look like. And so, this coupled with the macro thesis, coupled with, just some confluence over the short term with derivatives, to the downside, that's not something that worries me too much. And I'm pretty confident that we're, the thesis, the Bitcoin bull market is still intact, despite the kind of choppy price action over the last week.
Joe, what questions you guys got?
Hey Dylan, what's going on, man? I tweeted out earlier, and your mom responded to it, which was which was hilarious. I enjoyed that. But so my question's around price, right? So all these charts are super helpful. It gives us a good overview of everything. But I think a lot of people, at least in the chat, are asking questions about price prediction, right? So Plan B has at the end of this month, I think his low was 98,000, and we're obviously getting towards now. We're halfway over with the month and stuff. Everything you're looking at, do we have a shot at getting there?
I mean, I would say we don't have a shot. I mean, I think it'd be an upwards battle in the sense that we'd really have to have some major catalyst, but I wouldn't rule it out. You know, some sort of announcement, especially like, you know, what happened with Tesla, say earlier in the year, where it really kind of changes the attitude in the legacy markets, whether that's some big player announcing in quarterly earnings or something like that. Or even, you know, no announcements. It doesn't really matter. You know, just the broad kind of accumulation in the macro backdrop. If some big player is looking to secure an allocation, price could really get bid up there. But you know, the leverage would have to, you know, stay away a little bit, and we'd have to, you know, or just, you know, not let that kind of cascade us down away from that 90K spot. It would be tough. I think the options market's implying only like a 1% chance of that happening. I would say it's a little higher than that, but you know, looking at in the middle of the month here at 60K, it might be an upwards battle.
Are you buying options at 98K?
Oh, I still am holding all my call options from this summer. You know, they're bleeding a little bit. That time value is dragging down a little bit, but still very bullish. You know, still stacking, increasing my allocation here. So
nice. John, what do you got?
What's up, Dylan? Nice to see you again. Got the
John.
beanie. Love it. So all the metrics that you're looking at seem to be that we're still in a bull market. The price has appreciated a lot when you look back 365 days ago to today. Obviously, we had that mini bear run during the summer. But going forward, what metrics are you looking at that are going to be key drivers, like to when the bull market's ending, how high the price can go? What metrics are you looking at there?
Yeah, it would basically be kind of both on-chain and derivatives markets kind of screaming some of these bearish signs. So when we're looking at like the accumulation metrics, like Coindays destroyed, or you know, MVRV, market value to realized value, if these things are really spiking, showing kind of, you know, we're overheated in an on-chain perspective. We've kind of prices ran up a bunch. You have old holders cashing out at the same time where you know, everybody is euphoric and thinking this time is different and leveraged up. You know, going long still, you know, if price is at 150 or 200 or whatever insane, you know, multiple we're at some sort of market top, that would be a sign for me to say, hey, well, maybe we pull back a little bit here. And you know, as a Bitcoiner, as someone that has this decade long thesis, that's not a sign for me to sell. That's a sign for me, you know, to maybe reduce a little bit of leverage, stack some cash, and you know, be happy to buy the dip a few months or maybe a year later. So, you know, regardless of the price action, you know, my conviction and my thesis for what's unfolding here, it doesn't really change. It's just, you know, taking advantage of securing the largest allocation I can with this data.
Great thinking process.
Dylan, when we look at the next 6 weeks, there's a bunch of people who say, hey, Q4, that's when bull runs end. We saw that happen in 2017. Is your thought process that the bull run ends in Q4, or do we push into 2022 and kind of see a continuation of the bull run in the new year? Like, how do you think about timeline?
Yeah, I mean, obviously, like, you know, we're going to have to see in terms of the activity and the metrics and the on-chain data and the derivatives, but I'm not in the camp that I think this thing just, you know, putters out in 6 weeks and then we go home and you know, we see another 70% drawdown. I don't think that at all. I think in terms of adoption, we've kind of hit this threshold, this secular level of adoption at a nation state level, at an individual level, at a corporate level, institutional level. Bitcoin is much more accepted. You know, in 2017, you know, price had run up from $250 to 20K in what, 2 years. And so, you know, we were very, very overheated, and I don't think we're really at that level at all. We're still, you know, flirting with, you know, the 64K all-time highs we hit earlier. The on-chain metrics are not overheated. And so, you know, the longer we chop, the longer we consolidate, you know, people may be getting, you know, antsy, but that's actually really bullish. The longer we chop, the more this kind of spring compresses and the farther we have to run, in my opinion. So I think a bull market into 2022 is honestly my base case at this point.
All right. And then when you look forward, there's obviously the Bitcoin futures ETF. Do you have any thoughts yet in terms of what we've seen so far with the futures ETF? I know that Barry Silbert and the Grayscale guys continue to tweet out every chance they get that GBTC is more closely tracking the price and outperforming the futures ETF with their trust. But any thoughts there just at a high level?
Yeah, I mean, I think in terms of someone that's looking to gain exposure to Bitcoin, it's better than nothing. If I had money, trapped in some sort of retirement account, or as an institutional investor, I'd honestly be looking to allocate towards GBTC at something like a 10 or 15% discount in net asset value, even with a 2% fee, just because that kind of that rollover month over month with the futures ETF, you kind of bleed out against Bitcoin. But again, it is better than nothing. I think it's good for the kind of institutional adoption of the asset class. It gains, it allows for easier exposure and allocation, from these big money funds, not the average retail investor, but the institutions with trillions of dollars of capital to allocate. And so, I think it's just the first step. I think a spot ETF eventually comes, but in the meantime, Barry and the guys at Grayscale will be trolling a little bit as the competitors, get declined like Valkyrie just did.
And so the last thing I'll say is give us kind of a heat check on your friends, right? So we've now seen Bitcoin hit multiple all-time highs in the last couple of weeks. Do we have more friends that were not Bitcoin kind of knowledgeable or interested or invested in Bitcoin starting to hit you up and ask you about it? Or are they still kind of asleep at the wheel and they're not even caring about it?
Yeah, I think, I have definitely seen an increase, especially over the summer. I was talking about it a lot in 2020 and before that, and price runs up 600%, and it's obviously very enticing. And then price draws down a little bit, and maybe some people get a little bit scared, when you're buying at 60 and it goes down to 30. But I preach especially to people that aren't too in the weeds with financial markets or investing, and just like, hey man, this is a savings account, and you just want your Satoshi count, your Bitcoin count as high as possible. And so, passive DCA is honestly the way to go for most market participants. Just literally accumulate savings in the best money ever. And I've definitely seen some sort of sentiment shift, especially as inflation is really hitting everybody. It's not something that's more of an idea. It's actually like hitting you at the grocery store. It's hitting you with rent, with at the gas pump. And so it's much easier to explain the Bitcoin futures as, hey, you can't print this thing. And so in terms of just sentiment around friends, family, just people I talk to about investing into Bitcoin at scale, it's definitely, I think the conversation's changed from even just, 6 months ago.
Got it. And then before I let you go, tell us about the newsletter that you're writing. I've just dropped the link in the chat for anyone who wants to get it. You guys were kind enough to give a discounted link. So maybe just tell us kind of what you do, how often it comes out, et cetera.
Well, yeah. So I lead off content at the deep dive. And so at the Bitcoin Magazine markets newsletter, we send daily stuff on on-chain analytics, Bitcoin derivatives, and kind of the macro landscape in terms of how Bitcoin interplays with all of this. And so, there is a free and paid tier. We send emails daily to paid subscribers, but we send out free emails about once or twice or a few times a month. And so if you're just kind of looking for, a more in-depth, analysis of the Bitcoin market, we provide that, and we think we do a pretty good job.
Awesome, man. Well, listen, thank you so much for coming on. Let's do a quick follower. 81,000. Damn, John.
I miss the days he was under me.
John, he Ferrari Joe said, see ya, buddy.
He said, forget John, I'm coming for Joe.
What did we say? Do we remember what the prediction was for Dylan by end of year?
I had him at like 150, I think.
At 150? I'd go 150. You think you get there, Dylan?
Maybe if Bitcoin hits 98K by December, then
no, he is at 98K by the end of November and 135 by end of December.
Yeah,
I got faith, Dylan.
We'll
keep putting in the work.
I think you can do it for show.
Yeah, I definitely think you got a 150K. And I could tell because you're trying not to grin, but like, damn, that'd be pretty cool. 150K by the end of the year. That's about 70,000 or so in about 6 weeks. That's more than 10,000 a week. Yeah, you got that. No problem. Appreciate you coming on and talking about all this. I think people are learning a lot from it.
Appreciate you, Pomp Bros. Catch you later.